Mortgage rates have slid to an 11-month low of 6.35%. Now, the Fed is expected to cut rates 0.25% at their meeting this week. So does that mean that mortgage rates will be dropping another 0.25%? To that, I say unlikely. Mortgage rates aren't directly tied to the Fed funds rate. Instead, mortgage rates are influenced by things like the 10-year Treasury yield, inflation expectations, and just the overall US economy. In fact, mortgage rates often move ahead of the Fed, which is why rates are already sliding. Remember what Powell said back in August at his Wyoming Economic Symposium? At his annual speech that he has there, he pointed out risks in the labor market and said that the shifting balance of risks may warrant adjusting our policy stance. Since that speech, mortgage rates, they've gone down from 6.58% to the now 6.35%, or a 0.23% drop. So what does this mean for buyers and sellers out there? These lower rates are already fueling more refinance applications and are really starting to bring more buyers back into the market or into the market. I had 22 groups of people through my 2 open houses this past weekend, many of whom mentioned to me that they were just in the beginning process of trying to buy their first home. So, if the Fed does cut rates this week, don't expect mortgage rates to suddenly plummet. Maybe I'm wrong, but I'd bet against it. The bigger story is stability. It seems as though we may be entering a window where rates hover in the mid-6s instead of climbing back into the 7s again. That's your Tuesday in 2. I'm Nathan Mathisen. Thanks for watching.